This is Business Morning. Welcome to the program. I'm Ladi Williams.
And I'm Ini John Mekwa. Welcome to the show. Well, we start with the Group Managing Director of the Nigerian National Petroleum Corporation, Mr. Melekiari, who is insisting that there's no plan to increase the ex-depot price of premium motor spirit for the month of May, and oil marketing companies who are not in line with the directive can walk away. He made the statement after a closed-door meeting with the National Association of Road Transport Owners, NATO, and the petroleum tanker drivers in Abuja. Mr. Kerry adds that there are ongoing efforts to ensure massive improvement in the process of making petrol available, as the country currently has a stock of over 2 billion litres of PMS.
And the need for government to continue their intervention and support for local manufacturers in order to lend credence to the local content policy has been re-emphasized. The Executive Vice Chairman and Chief Executive Officer of the NCC, Professor Umar Dambata, alluded to this during a visit to Secure ID Limited. That's a leading manufacturer of SIM card and ATM cards in Nigeria, for the launch of its subsidiary, SID Digital.
The Executive Vice Chairman of the Nigerian Communications Commission, Professor Umar Dambata, with his team, arrives the premises of Secure ID manufacturing plant in Lagos, Africa's industry leader in SIM card and ATM card production. The team, in company of the Managing Director and Chief Executive Officer of the firm, take a brief tour of the 200 million per annum capacity manufacturing plant, beginning from the CQM lab, pre-press, press, collation, hot stamping, and personalization units. For adherence to international best practices in its production processes, Secure ID was recently awarded a GSMA Security Accreditation Scheme certification, which means the production site has been subjected to a comprehensive security audit and can now manufacture telecoms product for any company in the world.
Secure ID has been certified for over 1 year now.
This global accreditation for an indigenous SIM card and ATM card manufacturer appears as a boost to the confidence of the NCC boss in the ability of local manufacturers to meet the demands of telcos and banks in the country.
I think they deserve to be encouraged by government, and this is the message we'll be taking back to the Honorable Minister of Communications and Digital Economy. That we came, we saw, and we were very, very impressed, and they need the intervention of the Honorable Minister in order for their products to find more patronage in the Nigerian market space.
The Managing Director and Chief Executive Officer of Secure ID, Mrs. Kofo Akinkugbe, expresses delight over the visit of the Executive Vice Chairman of the NCC, their stride in the industry, as well as what the future holds for them.
We've always broken the bar. We've always believed that we need to continue to create value within the country, and that it is possible to do that. And I think that is what we've been able to showcase to him. And in addition to that, we get all these international certifications so that it gives us the opportunity for exports as well. So I'm happy that he was pleased, but the local content is a great opportunity for any manufacturing or any sort of company that wants to create value within.
Professor Dambata also takes time out to commission the latest subsidiary of Secure ID, SID Digital, which should afford the organization a broader platform to provide more tailor-made digital services.
We provide products like digital cards, identity solutions, payment solutions, smart city solutions, including transport ticketing and all of that.
Secure ID Limited is the first company to earn the GSMA Security Accreditation Scheme certification in sub-Saharan Africa and third on the continent, following South Africa and Algeria.
Well, the issue of unstructured supplementary service data, that's the USSD charges, seem to have been resolved with the agreement that everyone who uses USSD will now pay 6 naira 98 kobo flat fee per transaction instead of the customers being charged per session. But there's an unanswered question, which is the latest in the news now that who will pay the outstanding 42 billion naira? Telecommunications companies are asking banks to pay, and banks have said that while USSD is important to provide a range of banking services to their customers, it is powered by telcos. Well, to answer that question, we have Mr. Sajia Pampa, is the CEO, Convention on Business Integrity, explains to us the structure and who should actually pay this 42 billion naira. Good morning, Mr. Pampa. Thank you so much for making time to be with us this morning.
Thanks for inviting me. Thank you.
So if you could please explain to us the structure and who actually should pay this 42 billion naira debt, as long as it's not the customers, we hope.
Well, let's go first to who should pay. The banks should pay. The banks, from everything that we can see, the banks owe the debt. It's the banks that have been using the telco platforms. They're the ones who have been collecting payment from their customers. And now it's time to pay up. They're saying they would rather that this is billed directly to the consumer. And right now, you're saying who will pay? The question should be who is now paying? Because the cost of this service is between 1 naira and 2 naira, to be sure. And even though the banks would like to charge like 5 naira, the 1 naira 98 on top of it is really to gather money to pay off that loan. So it is time to request CBN to have a level of transparency on this issue and tell us the structure of that 6 naira 98 kobo. Who is every naira going to? What is it going towards? Otherwise, you will find that you have paid on the bank side and the bank is charging you again to be able to pay off their loans. This is an overhang from an argument they've been having between the telcos and the banks since 2019. So this argument has been going on. And in 2020, I think around July 2020, they came to some kind of compromise on this 45 billion. And this is where the central bank stepped in and helped their constituency by bringing in a charge. And that charge also contains the means to repay by charging you and I for that service.
All right, Mr. Pampa, what protection is available for customers to ensure that both the banks and telcos do not dump this on the customers?
I don't think there's any. I think this is a call. We should be calling the Consumer Protection Council to get involved with this, because this could actually degenerate into a battle for supremacy, not only between the banks and the telcos, but between their regulators as well, between NCC and the banks, because we're seeing regulatory actions that do not appear, at least to us, to be in the public interest. And so we need to get the Consumer Protection Council looking into the public interest on behalf of you and I.
All right, thank you so much, Mr. Pampa. We just wanted a quick clarification on that. Thank you so much for making time out to be with us this morning.
Thank you.
Yeah, well, moving over to another matter now. Last week, the president of the African Development Group, Dr. Akinwumi Adesina, made a case for Nigerian youths, placing the population of under 30s at about 70% of the 206 million population of Nigeria. Dr. Adesina says that it's time to start creating youth-based assets in Africa. We have Mr. Michael Adeleye. He is a human capital consultant and the CEO of Crystal Blend Group, to explain to us what he understands from that. Good morning, Mr. Adeleye, and thank you for joining us this morning.
Good morning. Thanks for having me.
So when Dr. Adesina says creating youth-based assets, what does that mean?
Obviously, it means one or two things. As we can tell at the moment, all our youths are not fully engaged. You find them practically focusing on education. And what happens after the education, there is no plan B for them. So if we could start in talking about the apprenticeship scheme, whereby you should be able to engage students while they're still in education on how to begin to gain practical experience while then holidays or have time off schools. I can't imagine when someone goes to school and spend 4 years in university, at the end of the education, they have no iota of work experience or practical work experience on their resume. That is uncalled for. I think it should be institutionalized, whereby from the day one they start the education, they should begin to engage them in working with the employer. You go to an employer, there should be a little bit of incentive being given to them that actually encourages them to actually begin to
But doesn't the youth service help with that?
That's another ball game. I've actually been advocating for this for a very long time. I think the whole NYSC should be restructured or overhauled. I see no reason why, at this point in time where our economy needs skills to be able to plug into all the jobs available, why should the military be the head or the helm of the NYSC? It should be captain of industries. It should be people in the private sector who actually understand what the economy needs. So when people come in there at the end of the education to serve, we should be able to identify what did you study, what did you need, what practical experience do you need, the industry out there, where do we send it to, not just gather them in there and at the end of the whole 1 year, it becomes wasteful.
Mm-hmm. So when we look at our exits from recession, we see that ICT played a major role. Yes, I mean, it contributed 14.70%. Yeah. And it's like the new normal now. With COVID, everything is going virtual and all that. So don't you think that this is where the youth can be pushed to? I mean, a lot of them already are geniuses. When you talk to them, you know, they can write programs, they are good with softwares. Shouldn't there be a way to push them into this area that is opening up?
Good question. Yeah. But my question is, who is actually aiding those avenues? Now, all these guys that you find, all these tech guys who are genius, they actually got to this stage by themselves. What is the investment of the government in engaging them to train them, investing in human capital development? The government should actually start to engage in ICT telecommunication companies to be able to spend money, invest in training of all this our youth. I mean, if you look at the background of all these guys who are up there, I mean, our youth in there, it's not that somebody pump money into that industry or into their hands. They actually strive by themselves to get in there. So what do you think is going to happen if the government actually invested or is investing into that sector? It's going to be a boom. Look at India, for example. I mean, talking about technology in India, talking about medicine in India, healthcare in India, the government actually have huge investment in that sector. That's why you have the population of that magnitude coming up to actually boost out the economy. That's what the government should be doing now.
So instead of spending on subsidies, we should be directing those funds to our
into human capital development. And also, the government should think about something. I mean, the microeconomy of any country is the base of any development. Now, if the government don't start to engage the private sector, let's say, for example, the government says, if you take on, look at the percentage of unemployment, youth unemployment in this country. If the government says, okay, we need to face this head on, every employer, every private sector in the country, if you begin to engage these people to have practical experience, maybe a 6 months training apprenticeship scheme with you, we will give an incentive. Let it be a win-win situation. Because the point is, no employer will not just put their money into something that's going to give them benefit, but the government has to get engaged with them. If you say to me, I'm going to give you a corporation tax reduction if you take on XYZ number of people, it's going to encourage me. If you tell me, get in 6 or 10 people into your company, we're going to make sure that we pay the stipend for them. You train them, we pay them the stipend. So it's going to begin to make people to understand, okay, now the government is participating, let's just do our own bit as well. So at the end of the 6 months apprenticeship scheme with an employer, there's every tendency that they're going to have a gain for the employment. Even if they have to get for employment, they will be able to write in their CV, I've got this practical experience.
Is it possible to do this without the government? Because already it seems the government is really overwhelmed. I mean, we're talking of how much they're paying for subsidy, ensuring that, you know, the petroleum products come into the country and all that. Is it possible to do it without the government?
It is possible. Like I said earlier, you have to engage the private sector as well. The government, as we speak, they have various programs paying subsidy, this to that. If there's a right policy in place, it will work out. The governments have no business in doing business. They have to bring up policies that they bring in the private sector to actually make sure this works. The private sector, they ain't going to say, okay, I have a chunk to throw to the public. They're going to do that. But the government participants are like, let's work together. I'm going to put in XYZ amount of money. You also bring some amount of money to make it work. It will work. So what I'm saying in essence is, let the government begin to engage the private sector. You have a lot of money being thrown out on subsidy to everywhere, but it is not bringing out the result that we actually need.
Okay, well, there are a lot of programs and initiatives for skills acquisition, empowerment, even the 774,000 jobs by the federal government. Are these making any impact?
You already knew what's going on. I mean, there's been rigmarole of all this questioning coming from the minister, from local governments, from politicians. Look, it's a good policy, but the implementation, it's not working. Why? Okay, the government should say, okay, this is what we're going to give us, 774,000 opportunities. Now, who do they engage? The public or the private sector? These things have been worked within themselves. Why didn't you throw it to the public? Let every local authority, okay, like there was a program that we used to have then, the Uba program, right? The government brought out the policy, but the private sector, the generality of the population, got engaged. You become a stakeholder. So I can go in there, put in my information. An employer from anywhere could go in there and go search for someone who actually fits into his or her employment or his organization. What happens from there, the government pick it up and say, okay, if you're taking this, we're going to pay you the stipends. And it's working. But when you have a policy and you're in control of the policy by yourself, you have no business in doing that. Bring it out, throw it to the public, bring in a lot of stakeholders, bring in captain of interest, bring in the public, bring the student, everybody. So we all participate. Then it becomes transparent.
But are the youths themselves ready for this? Are they maximizing the opportunities? Because some people have said the youths of these days actually are looking for easy way out, easy money, you know, quick money. They don't really want to pay the price. So are the youths ready? And we do have some, I mean, going by the age range, some youth in leadership position. Are they doing well enough to encourage more youths to be allowed into those positions?
Good question. If you don't, you know, there's a saying that goes, you could lead a horse to the river, but you can't force
it to drink.
Right? Now, if you take me to the river and I don't know the advantage of drinking that water, I'm not going to drink it. The opportunity, look, you just mentioned earlier that the tech industry is booming by the youth. They did this by themselves. They found the opportunity. Okay? Now, if we give them the leeway to come in, to be part of this, they will do so. I do what we call mentoring scheme. I mentor hundreds of youth on a regular basis on how to be able to go into gainful employment. And I tell people, going to university is not for everyone. I've said this time and time over again to the government. Everybody have no solution. The youth have no solution. That's why everybody puts their head going into university, right? University is not for everyone. What happened to our technical education? We used to have this in many years ago, decades ago, whereby you have people studying tiling, plumbing, electrician, and so on and so forth. Do you know how many millions will have been able to go through that channel and become skilled worker? If you have a construction company now, you can't get a Nigerian tiler. You have to go to the Republic of Benin to go and get in those professionals. If you want to look for electrician, if you want to look for plumbers, if you want to look for automobile engineers, you can't get them here. Because going to your question, if they have the open ground, they just have the open ground, they will go into it. Give them the opportunity. Look at what's happening to agriculture as we speak. Even if you don't study agriculture, you have the opportunity. Everyone's going there. Give them that leeway. They will go in there.
All right. Before we let you go, what mindset should the youths have at this point?
I I think it's a win-win situation, like I always tell my mentees. No pain, no gain. Now, you've missed out on the opportunity to go have that gainful practical experience while you're studying. At the moment, if I were them, I can guarantee you, if 1 million youth, as we speak, write to all employers and say to them, please, I want to have an experience with you, write an application for 6 months. By the end of that 6 months, majority of them will have the opportunity to have different employment.
All right, Mr. Lapa, thank you so much. We appreciate it.
Thank you so much for sharing your time with us.
Thank you.
And we know the youths are listening, and they will take advantage of it. Now we'll just take a short break. When we come back, commodities markets.
Is up. Welcome back. Oil prices edged higher yesterday, supported by a weaker U.S. dollar by concerns about the impact on demand from rising coronavirus cases in India and other countries actually capped the gains. Brent crude settled at 0.42% higher at $67.05 per barrel after rising 6% last week. West Texas Intermediate crude futures advanced 0.4% to settle at $63.38 a barrel, having gained 6.4% last week. The U.S. dollar traded at a 6-week low versus major peers on Monday, with Treasury yields hovering near their weakest in 5 weeks. A weaker dollar makes oil cheaper for holders of other currencies. However, COVID-19 cases have surged in India, the world's third biggest oil importer and consumer, dampening optimism for a sustained global recovery in demand. That's from COVID-19 in India also rose by a record 1,619 to nearly 180,000. To tell us more, we have Damilola Kimbami, research analyst with Financial Derivatives Company. Thank you for joining us, Damilola.
Good morning, Ladi.
Good morning. Good morning. Good to have you.
Morning. So India, world's third biggest oil importer and consumer, they recorded over 2.7 million cases in 24 hours. How do you think this affects the prices in the global space?
You see, so the COVID infection cases remain the most potent threat to any recovery, whether in the financial market space or even the global economic space, because as long as you have countries, major countries like India, US, even the UK, recording a rise in their coronavirus infections, it's going to slow down the pace of recovery, because then these countries cannot reopen their economies back to businesses and economic activity levels. And that's what we're seeing taper the price of oil right now, despite the fact that the dollar weakened, because obviously as the dollar weakens, because of the inverse relationship, it makes commodities that are priced in dollars cheaper to buy. But because India is recording a spike in its coronavirus cases, that is dampening oil prices, and it's going to continue. So even if we see oil prices trading around 67, 68, and bear in mind that in about 2 weeks roughly, OPEC plus the relaxation in their output cuts is going to kick in May for 3 months, so that you're going to have an increase in supply coupled with that rising increase in coronavirus cases, which is going to dampen demand. So it's going to weigh significantly on the global oil market.
Pullbacks in other markets too. Do you think it's related to this too?
Yeah, so other markets too are also pulling back. They're putting a hold on the use of some vaccines. We know of obviously what happened to Johnson & Johnson in the US, and even in Europe, we know they had stopped the use of the AstraZeneca vaccine for a while. So definitely, if more countries are stopping or putting a hold to the vaccination process, that is also going to slow down the pace of the demand recovery and to filter into the prices of commodities such as oil.
Okay, so now that Nigeria's production is increasing to about 1.4 million barrels in March, and in the face of the issue with vaccines in the different continents and all that, how is that going to affect us?
Well, for now, at least in the past, so like earlier last year, we know that like January last year, Nigeria's oil production was about 1.7 million barrels per day. So definitely we exceeded our OPEC output quota, and we had to pay for it by reducing significantly up to the point that now we're in compliance and we're producing about 1.4. So definitely now at least we're starting to see an increase. And like I mentioned earlier, once the relaxation in output cuts kick in May, meaning countries like Nigeria obviously will be allowed to increase their production, we stand to benefit, and that would also offset the anticipated decline in oil prices, because obviously as the supply of oil increases in the market, bearing in mind that you also have US, which is a major player in the oil space, also producing. So definitely you are going to see a dampening effect on prices. But as long as Nigeria continues to produce more, that should offset the impact on revenues.
Okay, but with all these challenges, can we see a price recovery, say, in the short term?
Well, in the short term, right now, all prices are trading around $67 per barrel. So despite everything we have discussed, they're still significantly above what we anticipate and even above the 2021 budget benchmark. So I think in the short term, all prices are going to continue to trade around these levels. Above 67, above 70, it's unlikely because, one, the supply impact is there and the fundamentals are still weak. But definitely as more economies gradually reopen, as demand picks up, China is a good story, as we're seeing that floor demand increase and is the largest consumer of oil. So that is some beacon of hope, and we definitely, at least down the line, we should see the market stabilize. But above $70 per barrel in the short term, it's highly unlikely.
All right, so moving away from oil, Nigeria has been ranked the 25th importer of services in the world, and then #1 in Africa. How is this affecting the prices and demand of commodity?
So for commodities, Nigeria is still a highly dependent, import-dependent country. So we import practically almost everything we consume. Even the oil that we produce, we import refined crude oil. So that's still a major issue for Nigeria, in the sense that because our currency is quite weak, the currency has weakened back, has lost about 3 to 4% in value so far in 2021, and that would continue to impact on commodity prices. And we know that the central bank is considering including wheat and sugar to its list of items that are banned from Forex, at least from official sources. So the Forex impact on food commodities, on food inflation and on commodities is very significant, considering other factors that are affecting inflation. We know insecurity is there. We know the cost of electricity has increased. So logistics and supply issues, all these are filtering in. So if you have that, if you have a weaker currency, a weaker naira against other currencies, so it's significant for...
And we're still dealing with the FX issue.
We're still dealing with the FX issues. So for instance, if the CBN goes ahead to include wheat and sugar, and bear in mind that these are two of its major import commodities. In fact, Nigeria is the second largest importer of sugar in sub-Saharan Africa after South Africa, and that is major. So imagine if those two commodities are added to the Forex list. That means other manufacturers or users of these commodities will have to source for their dollar needs outside the official market.
And we can't even meet local demand.
Exactly.
So what does that leave us?
It's going to filter into the prices of end products. So for instance, flour, pastries, confectionaries, you're going to see those prices increase. And bear in mind, sugar and wheat, they have this joint demand. So for instance,
most of the commodity use both of them.
Exactly. So it's a major issue. But then still, I'm sure the CBN is going to consider the impact, because bear in mind, the wheat is actually produced in Nigeria, mostly in the northern part of the country. But the wheat that is produced in Nigeria is not the wheat that is used. What Nigeria uses for its bread and other things is the hard red winter wheat.
But let's not forget that, I mean, the CBN is also saying that the whole essence of this is to encourage locals. I mean, we're talking of being the first, importation of services. Yes, why can't we produce and consume what we produce?
So that's why I was bringing the point about the type of wheat that we grow in our country and the type of wheat, the quality of wheat that we use. We use the hard red winter wheat, and the quality is totally different from what we produce. And the taste buds of Nigerians are used to a particular type of wheat. So remember what happened when we were talking about cassava bread?
Yes.
Exactly, and you know how that panned out. So it's going to be very difficult to get consumers to switch away from a particular thing to the type of wheat that we grow.
So it's about our mindset. Is that what we are saying?
It's about the mindset.
Can we change our taste bud?
It's also
because if it doesn't taste good,
it's not going to be something that will be done overnight. That's it. So obviously you have to have substitutes. So what can you do to complement or offset the impact? This wheat that we're growing locally. Are there other options that we can use? Are there substitutes? Yes, to balance it.
Take us through the domestic commodity price movement.
Yes. So right now we're seeing that a lot of commodities, if not all of them, have increased in price. So we're talking about pepper, tomatoes, flour, wheat, beans. They've all increased in price because, one, we've already talked about the insecurity and what have you, and now the Ramadan fast has started. So even also provisions, because what they use to break their fast, so you're talking about milk and things like that, have recorded an increase in price. Also, the security is a major issue because it's not just in the northern part of the country, it has spread further to the southwest and even to the east. And so now what we're seeing is that farmers can't even go to their farmlands, and we're in the planting season. So if you cannot even plant, what do you expect to harvest come Q3 when it's the harvest season? So it's a major issue, and that's why we're seeing commodity prices increase. And if these fundamental issues are not addressed, I know we know that the NNPC has said that there is unlikely to be any full price increase in May. But yes, but it's inevitable.
I think we have to wait for the assurance every month. That's what we'll be doing.
Exactly. Yes, I was
watching
watching your news program. I was like, okay, so for May, for the next 1 month, no price increase. When is it going to happen? Because it's definitely going to happen. Now, factor that in also into what is going on. The Nigerian consumer is embattled with so many challenges, and consumer disposable income has not increased. As in, very few people have recorded an increase in salary. Even if you are being promoted and you record an increase in salary, the real value of what you are earning has depreciated because of the value of the naira.
Okay, just before we let you go, I mean, we saw the revenue from the states released on Friday, and it dropped by 20 billion naira. What are the likely scenarios? And we heard the CBN governor saying that the state will have to pay what they are owing. What are the likely scenarios from this?
So, first of all, the states, they get most of their revenue from the FAC allocations, unfortunately. Apart from Lagos, Lagos is the only one that generates enough internally generated revenue, IGR, to be able to sustain itself. So most states depend on FAC, and we know that in January, the government revenue also declined due to lower oil receipts, and even the non-oil revenue was not sufficient. So definitely what it means is that states are going to continue to struggle to meet their outstanding obligations. They're going to continue to struggle to pay salaries. We hear today this group of people are going on strike, the next people are going on strike. So it's going to be a major issue. The states will not even have the funds to even provide the necessary reforms that would stimulate their states out of this recession, to provide the necessary opportunities. So it's a major issue, and then that's why also the government is focusing on how to look for new opportunities of revenue. So the tax collection, the royalties, all this would also play a role in the revenue generation of the country and the states.
Yeah. All right, Damilola, thank you so much for the updates. Research analyst at Financial Derivatives Company. Thank you for your time.
Thank you so much for coming.
All right, we'll take a moment now. When we come back, Business Morning.
You're welcome back. Well, now we'll go to the equities market. Well, not just the equities market, the capital markets. And I think we had a bit of good news yesterday. Thank God, Eddie, starting the week in the green zone. I'm happy about that.
Well, Ini, I'm also happy about that. We saw a lot of bargain buying in the shares of GT Bank and MTN Nigeria. And I would like to say that when we're looking through these numbers, we'll see how amazing MTN did yesterday. But to talk more about that is Abdurrashid Momo, a stockbroker at TRW Stockbrokers. Good morning, Mr. Momo. Thank you for joining us on the program.
Good morning. Hi.
So we saw unusually high activity, volume and value from MTN Nigeria. What was responsible for that?
I wouldn't know much about that, but I think it must be in form of negotiated deals, cross deals, based on what I can say for now is that what market is doing now is more of a sideways market. So you see a lot of volumes happening now. We don't see any rallies taking place. So generally, when you see high volumes transactions in the flat market, you know that something major is likely going to happen next. Because for now, the market has been trading flat. We've been doing more of corrections, and we've been trading flat for some time. So such transactions actually might bring out something good in the long run.
Well, we hope to see what good this brings out. The earnings season has, started. Yesterday we saw earnings from UBA and Unilever. Now, we had spoken about UBA, but for Unilever, what did you make of those numbers?
I don't think they were too impressive. Let me tell you what the pulse of the market, right? The market is a discounting mechanism. Everything you are seeing now has already been priced in, right? Even with the results that came out from, let me use UBA first, right? Even with the results that came out from UBA, which was fantastic, the price still remains flat. So no matter what comes in now, no matter what the market sits on now, has already been priced in. We are not going to see much rallies for now. We're just going to see stocks consolidating with more volume from what you saw from MTN taking place. That's big investors taking positions. I think it's going to be more value stocks now. Rallies, I count that out. The market is just going to trade flat for some time. And it's always good when market trades flat because there's definitely going to be a breakout. But the breakout is what we need to wait for, either up or down. But for people that want to trade the market, the strategy is buy into weakness and sell into strength. Because those huge rallies we saw last year, we can't see them now until something major happens. Any financials you see now is just going to be fed into the market for value investors to take position, not for huge rallies.
All right, Mr. Momo, thank you for your input on the program. Abdurrashid Momo is a stockbroker at TRW Stockbrokers. We'll just look through the market numbers now. The index was up 0.10% at 38,848.02 points, while the equity cap was at 20.330 trillion naira. Now, the month-to-date returns has moderated about minus 0.5%, while the year-to-date returns currently stands at minus 3.5%. We saw a huge turnover of volume, value, and deals traded yesterday. Volume was higher by about 93%. Value was higher by over 1,000%. MTN Nigeria contributed about 29 billion naira to the total 32.10 billion naira that was traded yesterday. And all of that was done in 4,324 deals. Sectoral performance was broadly positive. The banking sector was up 2.08%. And we saw GT Bank rise by about 1.2%. We saw gains from Zenith Bank. We saw gains from FBN Holdings. And also gains from UBA. Consumer goods was up 0.08%, and that was due to the gains from Honeyflower and International Breweries. We'll recall that the brewers have, been on the decline lately. Industrial goods was unchanged. Oil and gas was positive. Oil and gas was negative, and insurance was also positive. The unlisted securities market was negative yesterday. Began the week on a negative note, and of course that was due to some profit taking. We saw about 13.67 million units in 64 deals. Now, for the bond market, or the fixed income market rather, let's talk to Ramat Baba, the chief dealer of fixed income at FBN Quest Merchant Bank. Good morning, Ramat. Thank you for joining us on the show.
Good morning, Lady Young.
So what's currently driving sentiment in the fixed income market?
Okay, so we're currently seeing yields in the bond market going up, and pretty much that was because of the expectation. As a matter of fact, the higher results at the NTB primary auctions in the last couple of weeks. Now, moving into this week, we've seen a bit of buy demand coming into the system. And that's just because a lot of people feel the 45, especially, is trading at a pretty good discount. So there's been a bit of demand around that particular maturity, which has actually spilled to other maturities within that bucket.
Well, all right, Ramat, thank you for your input on the program. Ramat Baba is the chief dealer of fixed income at FBN Quest Merchant Bank. Well, we don't have enough time to look through those numbers, but like Ramat said, the bond markets, we've seen yields on the rise in that space, so we'll see how that will influence other trading activities.
Well, I think, Eddie, I'm going to find a way to change my affection, move to the bond markets and the fixed income, because, I mean, the equities doesn't seem to be holding up those sentiment very well. But anyway, that's where, Eddie, thank you so much. We'll take a break now, and when we come back, we'll do an opening call to London. Welcome back. We head over now to London, where Juliana is waiting to give us updates from the streets of London. Hello, Juliana. Good morning.
Good morning, Annie.
Yeah, so data from the Office for National Statistics shows that the number of employees and company payrolls fell by 56,000 between February and March. What's going on in the jobs market?
Well, I think the headline here in the UK is that the labour market appears to be stabilising after last year's pretty shocking performance during the first lockdown. This is the second consecutive month in a row that unemployment rate has fallen. So it's fallen from 5% to 4.9% in the 3 months to March. And I think economists had expected it to remain unchanged at about 5%. As you said, there is still a significant fall in on payroll. So 56,000 have fallen off the payroll in the month of March. It goes up to 836,000 if you want to go back to March when the pandemic really took a grip on the UK. But we have heard from Chancellor Rishi Sunak this morning. He's pretty happy with these details. We do know that 5 million people are still relying on the government's much heralded furlough scheme, which will come to an end during the month of September. At its peak, it did have 11 million people. So even though jobs are still going in the UK, the fact that it's at a pretty low rate of 4.9%, it's definitely something that would have cheered the Prime Minister.
Well, and it seems there's a bright side to the lockdown. It has brought the biggest drop in car insurance cost in almost 6 years.
Yeah, for some people, not for everybody. This latest data by comparethemarket.com does show that because over the past year, so many people have reduced the amount of miles that they drive because of the stay-at-home restrictions, and because there has been less people on the roads, there has been less accidents. So if you are one of the lucky few, then you may have seen your car insurance fall by an average of 43% a year, which I believe they've worked out as about £86. But then again, like I said, this is only for a small majority of people. Because of lots of Brexit issues, there are a vast majority of people that are paying much more for their car insurance, actually. And if you drive in London, Manchester or the Midlands, then you would be living and driving in one of the most expensive places to drive in Europe.
So the UK government has ordered investigation into the Nvidia's $40 billion arm takeover. This has been going on for a while. What are the concerns?
Well, according to the Culture Secretary, Oliver Dowden, it's all about national security. Some have questioned that and have really put this down to national strategy than security, because we know that Arms Holdings, which is a Cambridge-based chip maker, hasn't been owned by Britain for 5 years. It's actually owned by the Japanese SoftBank. Nvidia have putting a bid, a $40 billion takeover bid in September last year. There have been concerns. I think the main concern for the British government is that they want to retain arms within Cambridge. They don't want the US scrapping jobs and taking it over. And so, yes, a lot of observers are saying this is more about strategy than security. But Oliver Dowden spoke this morning, and he did confirm that he has indeed instructed the Competition Markets Authority, the regulator, to make sure, you know, that things are going to be kosher if this deal does indeed go ahead. And they've been told that they need to respond back to the government by the end of July, and we'll then find out whether or not this deal will take place.
All right, thank you so much, Juliana. And, well, I say get prepared for Laddie in the afternoon.
Oh, well, thank you.
Yeah, so we'll now take a peep into the crypto market with Laddie Williams. And Laddie tells me it's still a bloody road or bloody street.
Sea of red.
Yeah, sea of red everywhere.
Bitcoin,
I see that.
Massive pullback there, $54,361 this morning. Ethereum, $2,088. It's really, it's incredibly red this morning. And, you know, you feel like at some point we should have a bounce, but I don't see that happening yet. Let's talk to Rume Ofi now. Hello, Rume.
Good morning, Laddie.
Good morning. You know, a lot of traders keep talking about buying the dip, but what do you do when the dip keeps dipping?
I think this is the best time to be alive, if you ask me. As for us traders, what we do is, it's called, I always tell my students that I do dollar cost averaging, where at every dip, significant dip, for example, I have studied that the market is always going 10% down at for this year now, from late last year to this year, 10% dip at a single day. But the last one that happened was more than that. So at every 10%, I buy news, I invest my money getting new portions of the Bitcoin. So at that point, when it goes up, I could make a lot of profit from that. If it goes down again, I add to it. So, but for newbies, they always go to buy the top, and when it comes down, they're losing a lot of money, and that's not how to make the best of the bull run. We are still in the bull season, and I know a lot of things are still going to happen. Thank you very much.
So the bull market is not over?
It's not over yet. It just started.
Okay. All right. Well, what's the update on Coinbase stock?
Well, so Coinbase actually, is being listed on Nasdaq quite all right, and the market is actually excited now because Coinbase is actually listing an option where you can buy stock at a particular date of your choice, like a contract where we have. It's very similar to that of futures trading, where you can say, I am going to long at this particular period of time, which means I am buying at this period of time, or I'm going to short at this particular period of time, which the market is going to go down. Either way, you're going to make money. So like betting on the market. So, but the risk side of it is if you are shorting the market, and the market goes long and it expires in a particular period of time, you get liquidated and you get to wreck city, but you have to be smart about it. So well, the market ended on the downside yesterday at about $333 per share. I know this one is going to be excited. I'm very hopeful.
All right, and we see China changing its stance on Bitcoin, calling it an alternative investment. What's happening there?
China, it's the Chinese are very, at some point, I can be very skeptical with them because they're very smart people, highly smart people. And I'm talking to you, China controls about 65% of total hash rate, which is mining, where new Bitcoin, process where new Bitcoins are being issued and the network being secured. And same China is telling us that 4 years ago that they are putting a halt to Bitcoin transactions, making it look scary for those outside China and their citizens alike. And still them coming again to tell us that they are coming up with the digital yuan. And the significant part of it is you cannot discuss anything decentralized or digital currency without making reference to Bitcoin and other cryptocurrencies. That's a fantastic part of it. Fine, we've agreed, and I want to see some few changes in their regulations here and there to allow for a few things to go on around Bitcoin and other cryptocurrencies.
All right, Rume, thank you so much. Always great to talk to you. Enjoy the red day. Well, Ini, that's it. Market cap 1.97 trillion, down about 5%. So we know we're at 2 trillion for a while now, but we're having pullback across board.
Rumor called it a significant dip.
Yeah. Yeah.
But we'll see where it goes from here, Ladi. Well, that's it. That's where we have to draw the curtains on Business Morning for today. Thank you so much for watching. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.